What's up, guys? Welcome back to the Coinist channel. Hit the subscribe button right down below if you're new here. Trading, market, charts, everything to keep up with the crypto market happening right here on the channel. I have a podcast for you today with Crypto Messiah, and we cover what's happening on Uniswap. Uniswap is the top decentralized exchange in the market right now, and it's at the heart of this bull market. Yield farming and DeFi, two trends that are causing tons of coins to return 2x, 5x, 10x multiples. I wanted to speak with a trader, Crypto Messiah, who spends all his time on Uniswap, ask him the best tips to find new coins, how to use this platform, how to nail trades there. I had a lot of questions. I imagine some of you guys have those questions as well. So we dive into the game of Uniswap, how it works, how to make money there, and what's happening. Hope you guys enjoyed the video. Like I said, like and comment, subscribe right down below. I want to hear your thoughts. Also, there's 50% of you guys who watch these and don't subscribe. I don't get it. Just subscribe right now because I have a lot of videos coming out your way. I hope you guys enjoyed the podcast. You can always listen to these on iTunes and Spotify with the link right down below. I don't want to waste any more time. Enjoy the episode.
I think we can start the show. And guys, it's Friday. I brought someone that's always topic relevant. Everyone right now is looking for the biggest multiples on Uniswap. So I had to bring on Crypto Messiah. What's going on, brother?
Hey, what's up, Luke? Thanks for having me here, man.
Of course. It's been a long time coming just because of the Uniswap craze. Dave Portnoy has this army of day traders. You have this army of apes, I think you call yourself. Where'd that come from? Because it's a ton of people now that look to you for this Uniswap meta, for the next Uniswap gem, and this is your life now.
It all kind of stemmed from, we of course, everybody at least that's been here since 2017, got to experience those highs, which were incredible, and then in the following years experienced the lows as well, which were probably of greater magnitude than the highs, just because they lasted so long, and I mean it was brutal for everybody, I think, that was involved. Even if you did sell some, in 2017, nobody sold enough in retrospect, and there's always that looming question of, what could have been if I had just realized that, I wasn't as brilliant as I thought I was, in that moment, and I had taken more off the table. I have just been waiting for a sign of anything, because I've been here a long time. I knew that these markets were going to come back. I knew that people were the same as they had always been. People are greedy. And as long as human nature doesn't change, as long as there's not regulatory measures that are set in place to stop these things, then the markets, especially these altcoins, are going to continue to be bumped and dumped. They're going to be cycled. Now, the revolution here actually started with Hex. And I know a lot of people are going to say, Richard Hart, he's a scammer, blah, blah, blah. But look, I don't have any opinion on that. But I do think that, whatever is Hex BitConnect 2.0, blah, blah, blah. Maybe it is. And I haven't looked into it that much, but what it did do is it showed people the power of a decentralized exchange, a new age decentralized exchange and automated market making protocol. That's the revolution here, because where all of these doors had been closed before for access. And we had this situation to where US guys couldn't trade on Binance. You can't trade on Huobi. You can't trade on KuCoin. You can't trade fucking anywhere anymore. Can I say fuck on your stream?
You can say whatever the fuck you want.
Okay. I'm just making sure you never know. I've got a potty mouth and I'm well known for it. So I'm going to continue to speak how I normally would. So, no matter where the fuck you wanted to go, they were going to tell you, no, you couldn't trade. And I think that was one of the largest contributing factors to how long this bear market persisted, was this regulatory pressure that was put on all of these exchanges. Now, in the spirit of crypto, of course, people are going to always innovate and figure out ways to push this narrative and this agenda forward. And this came in the form of unstoppable protocols, because with things like Uniswap, they're smart contracts. They're deployed to the Ethereum blockchain. Regulators can say, hey, don't use Uniswap. That's illegal. But at the same time, they can't stop anybody from using it. Let's say they come in and they seize Uniswap and they seize the domain. That domain is just an interface to make it so that anybody can interact with those smart contracts.
Sure.
And that interface, the code is publicly available. Uniswap, a new automated market making protocol, just forked Uniswap exchange front end to interact with their new smart contract infrastructure. So even if somebody took it down, it's like a hydra. I mean, the next day, multiple sites could pop up in its place and allow people to still interact with these protocols. So they truly are unstoppable. I mean, this is next generation kind of crypto. So I saw Hex happen and I was like, holy shit, like things don't really go, 100x in a bear market.
Yeah.
Maybe something's happening here. After that, I started getting my hopes up a little bit. But I'm still scarred.
I have a question with the Hex.
Sure.
Because I've seen Richard Hart post this, and I don't want to talk too much about Hex. It's just not an interesting project to me. But I think the phenomenon of it kicking off a Uniswap season is pretty interesting. It's gone up now like 100x, but isn't that because it dropped from, I don't know what the listing price was. It was X amount of Hex per ETH, and then it dropped like 99.5%, and then it went 100x from that bottom. Right?
Yes, that is absolute fact. Okay. It's not like it listed and everybody got hilariously rich. In fact,
everyone lost money. Yeah,
everyone lost money. And by that, I mean, look, trust me, if you bought something after an excruciating bear market, and you're already wrecked, and you put your last, whatever Bitcoin into it, and then all of a sudden you draw down another 99%, you're probably just getting the fuck out of here.
Exactly. Okay.
Let's be honest. Like you're out. So it's got scam written all over it, but a lot of this stuff does. A lot of these things are just money grabs, and it doesn't matter what people try to tell you that they are. I mean, those are just, no matter what kind of project that we've seen in the past. Every single project that pumps has one thing in common, and these guys know how to sell their narrative. When you look into this project, there's actually people out there that believe that, oh my God, this is a game changer. Right. And it's that narrative that fuels FOMO and that fuels the market to go up. One more
thing. And for people that aren't putting those two together, the Hex Project, which is, I'll give my opinion. I think it's a rather gaming project, but that doesn't really matter too much. The reason these two things tie together is because Hex was one of the first projects that had serious volume on Uniswap. And that serious volume, along with it doing 100x from its quote unquote bottom, is what maybe led to other people saying, holy shit, if we can get a project listed on Uniswap, this is the type of interest they're generating, this many people can access it, and these coins can actually move. Right? That's the only reason we bring up Hex. All right, go on.
So this is what's kind of unique about Uniswap, and this is why I own. If your coin, for the most part, because there are exceptions in my portfolio. If you even want, my bags is a better word for it, but typically in 99% of cases, if it's not on Uniswap, then I'm not interested in it, and that's because Uniswap has open the doors for anybody in the entire world to have access to the asset that you are interested in.
Yeah.
And what that does is, where if I buy an amazing bag on Binance, then the only people that can pump my bags on Binance are the people that have access to Binance and the people that can, that can push that up. But if I buy an amazing bag on Uniswap, the whole world has access to that, and anybody can come in, anybody can participate, and anybody can push that bag up. That's the revolution behind it, and that's why all of these things are going so crazy, because you've got, it's like 2014 again, back when exchanges didn't care about KYC, they didn't care about money laundering and things like that. You've got the ability now for anybody to come in and be a participant.
So Messi, I have a question, and I want to get into Uniswap, kind of the meta game, talk about strategy, how you filter through projects, because I think just last night I saw on your Twitter feed that you caught another 6x or 40x. You had Romano talking about you had Romano talking about some insane trades. So I want to get to all that, but alongside, just to follow up to everyone being able to participate, because I know some people look at Uniswap, they say this is a DEX, everyone can buy. Right now, US can buy. My question's always been, what happened? Like, how is this a different situation than Ether Delta or than IDEX? I look at Uniswap and I think it's pretty similar. It has a lot of things that aren't tradable anywhere else. They're rather new projects. They're pretty small market cap, right? Lots of opportunity. Obviously, it comes with risks. But I don't see too much of a difference there. And IDEX eventually siphoned off US customers. They had KYC. You have things like DXDY, which claims to be this centralized exchange. US can't participate. You have Ether Delta, which was eventually brought down by the feds, right? They said,
Right.
we got to stop this. How does Uniswap avoid that? And is this the first truly decentralized changes? Were those all fakes? Like, how does this one not go down a similar route to other exchanges did, blocking US and getting shut down by Fed?
Well, because Uniswap is a smart contract. That's all it is. Uniswap, the website itself, is an interface to that smart contract. And that's what sets it apart from everything. The revolution behind Uniswap, was something, the concept was actually first introduced by Bancor, I believe, which, it took a while to catch traction, but, they're doing some incredible things now and really pushing this whole DeFi and, decentralized space forward. But, with an automated market making protocol, it's a lot different than a DEX, because when you look at IDEX, it's not a true DEX, it's hybrid, because their philosophy was, if I can take the best parts about a DEX, which is, of course, decentralized custody, I retain control of my coins, and then combine those with the best part of a centralized exchange,
centralized order book,
this, that, then we have the secret sauce, and that's going to be a hit. Not to say IDEX missed the mark, because if you look at their token and you look at their volume metrics, they're certainly performing right now.
And that was incredible back then. I mean, that was probably the most similar thing we had to Uniswap during the last bull run. I say that because a couple of my biggest plays were on IDEX. If you could buy an IDEX coin,
that was the gem factory.
Exactly. Before it got listed on Binance or somewhere else, you would make a killing. I mean, those were 7x, 10x plays for me.
Now, the magic, of Uniswap, though, is that what a lot of these exchanges failed to capture, and a lot of them are still failing to capture, was that the majority of users didn't necessarily even want that experience of having an order book, because I actually onboarded a friend of mine to crypto a couple of weeks ago, and I was trying to teach him about order books and stuff. And something that was so simple to me was extremely confusing to him. And we're talking about a smart guy, right? We're not talking, this guy's not an idiot. He's, our age. He knows technology, but, he's looking at an order book and he's just like, what the hell is going on here? Wait, what is a limit order? What is a market? All of that stuff is very overwhelming. On Uniswap, you can do two things. You can buy and you can sell, and that's it. What the automated market making protocol does is you have liquidity providers that come onto these DEXs and they say, hey, I'm delta neutral, right? All I want to do is collect fees on people buying and selling. So let's say I have, I'm trading Bitcoin on the DEX. Let's say it's Wrap Bitcoin or Red Bitcoin or whatever.
Sure.
And I wanted to be a liquidity provider. So what I would need to do is I would go to the pool and I would put up 1 Bitcoin of liquidity versus the base pair, Ethereum. So whatever the value of this is, that 1 Bitcoin in Ethereum, I put up that amount of Ethereum too. And, as the market moves up and down, the liquidity moves with the price. And as a liquidity provider, I take in fees from the exchange. Now, the other people that participate are people, that are takers. I want to come in and I want to buy and I want to sell. Well, this liquidity is balanced, which is important. It's 50-50, and it's also bidirectional. So there's immediate liquidity on almost everything for me to actually enter and exit a market. Now, one of the incredible things about these automated market making protocols is because the liquidity moves with the price. Let's say in a centralized exchange, I buy an asset, it pumps 10x. Well, I've either I better have limit order set, or I'm going to miss the mark because it's going to wick up. Or, I better hope that whoever's pumping this is going to be providing liquidity up there at the top.
Continues to pump.
Yeah, continues to pump. If those conditions aren't met, the likelihood of me actually realizing that pump are very slim. Okay. But with an automated market making protocol, something pumps 5x. And the entire time it's pumping, more liquidity is being shoveled into the pool. So, I come in, I buy, X amount of coin, and my Ethereum goes down here. And, the price moves up as well. So at the top, when this has already gone up a lot, what ends up happening is there's huge liquidity there for me to exit, and it's right there for me every single time. I much prefer the automated market maker experience to the experience I've had on centralized exchanges, and I've been dealing with centralized exchanges for 8 years. I mean, it's that good, it's that easy, it's that available, and with the amount of liquidity, like you'll have projects that are $3 million market caps with 2,000 Ethereum of liquidity. That's bidirectional, which allows you to trade smaller cap projects with reasonable size. It's incredible.
It's a totally new market dynamic. I mean, you're right, that hasn't been replicated anywhere else. I think that probably describes why you do see some of these things run 6, 7x, 8x, 10x, and it's not like, sure, there can be a rug pull, we'll talk about that, but it's not a 10x wick up and then a move 90% down the next day. I mean, right. These are sustained multiples they're doing, not only because they're smaller cap projects that people are finding them, but it's also because of simply how the exchange works, how people are trading there.
The automated market making protocol is very conducive to price stability. And when I say price stability, I don't mean, hey, it's a stable coin. I think it's more of something to look at, like you're not going to see extremely erratic market movements. Everything is going to be more gradual.
Sure. All right, let's talk meta. How are you finding these projects? I mean, I messaged you a week or two ago about something that I had found, and for guys that don't spend 12 hours a day on Twitter in Telegram rooms, haven't built an extensive network of people that can trust that they're looking at these things. I mean, there's a lot of people that aren't full-time, but they look at this, they say, this is a hot theme. I want to take some more risk. I want to look at Uniswap projects. I'm on the DeFi train, but how in the fuck am I supposed to determine this is a good buy versus, this chicken tender versus this spaghetti coin versus people say the word yield farm, right? Their heads spin and they say, how do I even vet a project? Should I be buying outright scams? These are serious questions that people have. So what's your process been? And I think that'll give people an insight into the metagame.
Well, I do mention products or projects that I've bought into. I mean, I've never accepted money to talk about anything ever, and I don't plan on doing so. People say, well, what about Hero? Well, I don't shill Hero token because it's illegal for me to do so, and I'm actually an owner of Hero. So, there's your answer to that. And I purchased that equity. They didn't give it to me.
It's funny, Messi, as you say that, it's like an unwritten rule, I think, for a lot of guys that are around in 17, 18. It's like the one rule is don't take money to promote a coin. But that's kind of common now. Like you see it sometimes. With
the right market conditions, I can see the appeal of taking that money. Just because if somebody says, hey, I'll give you $5,000, to make a post about it to your audience, then, a lot of people are going to say that's significant money to me. Like, how can I say no to this? My whole objection to it is that, a lot of times these people don't do the proper vetting and the research behind these things. And the last thing I want to do is have somebody have a bad experience in crypto or lose more than they can afford to lose because of me. And I take a lot of responsibility in that. So anything I post about ever is something that I typically will have spoken with the development team at length. I will have looked at the code. I will have checked out the token economics to make sure it's not something ridiculous. And of course, nobody's hit rate is going to be 100%. But the question originally was, what's the meta? What's the meta exactly? How do you actually do these things? A lot of it comes down to experience and networking, as you said. But the one thing that anybody can do is look for novelty. Think about it this way. In 2014, Dogecoin pumped, okay? And that kicked off the meme coin fad. And after Doge, you had several other coins that were meme coins as well. And these coins did perform, but gradually over time, you got projects that performed less and less and less. Nobody was going to be the next Dogecoin, okay? Similarly, you had Darkcoin, which started as Chain Coin or something like that, I think, and then it eventually, rebranded to Dash, as many of you know it today. They launched, and while they had like a mixer and privacy and stuff like that, the fad was they had this mining algorithm that was called X11, In X11, the big thing back then was I want to make an ASIC resistant algorithm because I don't want to start mining something and, be outmined by a bunch
China.
of guys with specialized hardware. Yeah, China and all these places. So then that kicked off a fad. Well, we've got the X13 mining algorithm. We've chained 13 hashing algorithms together. We've got X15. Eventually, though, the hype died down. So you can immediately protect yourself, whether you are an extremely knowledgeable market participant or not, by only even considering things that are novel in some shape, form, or fashion. When Tendies dropped, I was talking about it at a $1 million market cap, and people said, you're a piece of shit for talking about Tendies, bro. Like that's bullshit, blah, blah, blah. And I said, well, have you actually, I've spoken to the developer. I've looked at the code. I looked at the website. I've done a lot of homework on this. And as silly as it is, it's novel because we're talking about a meme coin for the DeFi age. You've got really two things that are pumping really hard right now. And those are DeFi projects and other projects that are revolutionary monetary experiments, Ampleforth, Anti-Ample, tokens of Babel. There's been so many different Ampleforth clones and things like that. But this all goes back to the whole concept of, hey, Ampleforth really pumps. So now we're going to do Ampleforth, but we're going to have this kind of rebase. And we're going to do Ampleforth, but we only rebase down. And we're going to do Ampleforth, but the rebases are random. So there's all sorts of different takes on this original idea, but there's still never the original idea.
Sure.
Tendies was the original meme coin. And so many people have tried to replicate this cycle's meme coin. You've had tacos and nugs and
spaghetti,
spaghettis and this and that. You've had things like yams, which it's meme-ish, but it's not designed necessarily as a meme. Yams was a yield farming coin, which differentiated it from Tendies, which is a hyperdeflationary currency that redistributes to the top 50 holders. So they are different. They're in different leagues too, because with the absence of yield farming, Tendies isn't going to attract $600 million of liquidity and yield farming like Yams did.
Sure. So,
but yeah,
this is another thing I think about. Novelty makes a ton of sense to me. Finding the first thing. People even have now pointed to Ampleforth and they said, well, this thing's basically just going to cycle now like Doge did, right? Doge had this amazing pump and now it's just watered down versions of that same pump over and over. That idea is out of the bag. People are less interested in it. Ampleforth kind of did the same thing. That was the first novel, rebasing coin. Now you have Tendies as the first kind of novelty hyperdeflationary currency. But when I look at something like Tendies, obviously that was an incredible play for you. 1 million, it's a $10 million market cap now. For people that are looking at new projects, and something I think about, it's while these projects I think are perfectly positioned to benefit from the Uniswap hype, right? It can go from a 1 million market cap, 10 million market cap, or maybe even a 2 million market cap to 20 million market cap. I'm really hesitant to say that these monetary experiments and these meme coins will actually attract attention from a really wide user base. The only reason I say that, the coins that did incredible during the last bull run, partially it's because we had waves of new retail coming in, you had incredible exuberance. But I think the other reason was they had these grandiose visions that said, this is why we're applicable to this industry. We have total addressable market cap of trillions. They have these grand things, whereas these projects, and actually kind of respect it a little bit, these projects are a little bit more sober in saying, look, this is an experiment. This mechanism is probably going to cause the price to pump. You should buy into it. It's going to be reflective, and other people are going to buy into it, and it's going to fucking go up. But I'm not sure that leads to the $100 million market caps, $500 million market caps.
It doesn't
okay, cool.
Okay,
so it doesn't have to. Okay.
And it doesn't, and maybe some of these projects will eventually reach $100 million market caps, and maybe they won't. But the thing is here, the difference was, if I wanted to buy a big bag of a coin in 2017 when it was a $3 million market cap, I'm buying into an illiquid market. So I need this to be a large market cap to have exit liquidity. So the difference here is that on Uniswap, I can buy into a lower cap project and it can 5x, 10x, and there's immediate exit liquidity there. I always tell people the probability of you having that next 100x in your bag is extremely low. And while this, may seem unrealistic, all it takes is a 5x rolled into a 5x rolled into a 4x for you to achieve the same result with lower downside risk and higher probability. So why would you not take that approach, versus being a hopium bag holder, hoping that you have the next big thing?
Sure.
Newsflash, you don't have the next big thing. But that's really kind of what it boils down to. Now, here's the thing about DeFi that I don't think a lot of people are getting yet. Because you brought up a good point. In 2017, you had these projects with these grandiose visions, and we've got $3 trillion of addressable user base and this and that. But the issue is that there was no product market fit. These projects had to go out and they had to attempt to get a piece of these markets that they didn't already exist in. And that ended up being something that was impossible for them to do, because nobody wants to have a parking space on the blockchain, where it all boils down to it. It's just, maybe it sounded good on paper, but it's just a shitty idea. Okay. But it was sold and it was pumped, or, whatever, all these.
It was backed
it was backed, and there's VCs behind it. They were greedy, and how it goes. The differences with DeFi is that it's the first thing that's ever happened to crypto where there is immediate product market fit, because DeFi is products for crypto made by crypto. So they don't have to go out and pursue external money. They don't have to go out and hope that they're going to find a product market fit in some sector where there's a lot of money that they could pull into their ecosystem. The customers are the traders. The customers are the holders, the exchanges, the degenerates. And, while most of these revolutionary monetary experiments are never going to, amount to maybe more than $20 million market cap projects, like I said, it doesn't matter. You get in, you ride the pump. The name of the game is liquidity here. And DeFi is enabling this massive amount of liquidity in the system. And not only that, look, this bubble pop's going to be really, really bad this time. And that's part of the reason why I said, I'm going to semi-retire after this bubble, just because I don't have it in me to sit around for 5 years after this. Because of how brutal it's going to be. In 2017, ICOs created a form of leverage on the system, because you had these initial ICOs that raised all of this capital, and they said, well, hey, I've got $100 million. This company only needs $10 million to operate for the next 5 years. So I've got $90 million just sitting here. What are we going to do with it? Well, hey, this new ICO project just came out.
Sure.
We're going to invest this money in this new ICO project. Then this new ICO project comes out and says, hey, we raised $90 million, right? That's a form of leverage, because at the end of the day, you had all of this value that was created, and you had all of these people claiming that they had raised all this money, but the raises, were actually much smaller than anybody realized.
And Messi, the extra part of that hidden leverage that I'll add to that is, let's say that project is worth 90 million, or they raise 90 million, they then reinvest 70 million, or let's say 90% of that money they raised. They invest that next 80 million into a project, and that project sells 20% of their tokens. So that 20% of their tokens that just raised 80 million just created a hidden leverage of 4x more. Now there's 280 or 380 million of phantom value.
I mean, this is literally pimp my crypto. Hey, I heard you like leverage, right? The whole system became incredibly leveraged, and that's why the bubble popped. So here's the thing with DeFi. DeFi shares a lot of the same characteristics as that. The difference being that there is product market fit. And in the real world, in the financial system, leverage is a very real thing, but it's been made sustainable by checks and balances that have been put into place. The question is this leverage going to destroy crypto this time around, or because we're creating all these revolutionary financial tools for crypto, is it going to balance itself out? You've got the original yield farming projects like YFI, right? And the thing is the newer yield farming projects that came after these projects said, hey, you need YFI to farm our yield. And then the projects that came after them, YFI and XYZ, just random made up, right? After that, the third yield farming project says, hey, you can yield farm with YFI and XYZ. And then you're going to get our token, which has value. And we're paying people this token to be our liquidity providers, so that this token does have immediate value and it's desirable to farm. So there's actually leverage being created that way. Now, an additional form of leverage that didn't exist like it does now in 2017 is the lending market for crypto. You've got an unbelievable decentralized infrastructure being built out for loans. So let's say that I, make a bunch of money and I Ponzi my way up through the 5 DeFi projects that I've liquidity mined. And so I've got all these tokens that I can now loan out.
Sure.
Or just to simplify it, let's just say I just have basic Ethereum. Okay. So I provide my Ethereum as collateral for a loan. I take USDT based on that collateral. I'm not going to get 100% of my Ethereum value in USDT, but it doesn't matter. What matters is that I'm able to build a leverage position in Ethereum by taking that USDT, going to a different lending platform, and then borrowing Ethereum.
Sure.
Then I can take that Ethereum to another lending platform.
Collateralize.
And, to ad infinitum, and get extreme leverage. And in the right market conditions, that leverage can put an unbelievable amount of buying pressure on these assets, and also can make me hilariously rich. Now, the question is, when does it all come crashing down, or does it? Because DeFi, unlike anything else in crypto, will grow with crypto in general, because crypto users are the customers. So, hey, let's say Bitcoin makes a new all-time high, right? And there's all sorts of news, or maybe it's Ethereum. I don't know what's going to be the driver for this bull market. It typically has been Bitcoin, but I don't fucking know.
A little bit of both, yeah.
A little bit of both. But whatever is the catalyst for bringing in this new money into the system, all of these people are now DeFi customers. I've got companies are going to make it easy to participate in DeFi. Let's say I have the ability to come in, I can buy a Bitcoin. I've got $20,000. Bitcoin is it's just on the edge of making that new all-time high, right? I got $20,000. I'm a pleb. I'm a normie. Hey, what am I going to do? I can put my $20,000 in a savings account, and I can get 1% per year on it, or whatever they're giving out right now. Or I can buy a Bitcoin. I can participate in the DeFi ecosystem, and I can get 30% APY on that. Those customers are just going to continue to pour in, and it's a no-brainer, especially when you see a lot of the institutional money that, shit, if I had $20 million, I would care about flipping shit coins, right? I'd want to get, 30% APY all day. That's insane return.
Yeah.
It wouldn't matter to me, but all these new people are going to be shoveled into the DeFi ecosystem. And I think that it's only going to grow from there.
So thinking about that next bubble, how it could possibly end, obviously there's going to be an unwind. Who knows when that is? I think the best way to kind of, as people look at bull markets, I think there's a lot of focus on which token's going to do the best. I think the better way to spend your time is just to gauge, is everything still going up? Is there still increased interest? Is there still catalyst? Is there still more leverage being tacked on? I think that's probably a better way to spend your time. But outside of that, as people are listening to this, they're on the DeFi train, I imagine already. They're just saying, how do I get involved in this? What's the starting point, right? They're now probably going to look at some of these meme coins and say, I found the next meme coin, or they're going to listen to this and say, how do I find my edge?
Well, I'd say that depends on a couple of factors. The size of your bankroll is very important, because, that's going to determine where you actually want to allocate your funds. If I'm trying to make myself into somebody from nobody, then I probably am going to want to have a riskier approach to all of this. I'm going to want to play the pumps. I'm going to want to mess around with compounding on Uniswap. Kind of a more degenerate approach. But as I said before, I come in with $10 million in the game, and somebody's going to give me 30% APY. I'll milk that all day. That's huge money for me. So I think that's the first question you need to ask yourself. People are participating in these yield mining experiments with small bankrolls, and yield farming is very much tilted towards guys with larger bankrolls. Just a lot like the mining industry. The guys that have the money, the latest equipment, are going to make the money. And if you're a small fish and you've got the last generation miner and you only have one or two of them, it's almost not even worth having it, right? You're better off putting that capital to use elsewhere. The number one thing, I tell people is that, a rising tide lifts all ships, of course. And if I was a total crypto noob and I was coming in, I think the best thing to do would just be to get exposure to some of the projects that are more accessible to everybody, not take too much risk, because for everybody that you see on Twitter saying that they're killing it on Uniswap, trust me, there's 100 people that aren't, maybe more, because, this is a zero-sum game. Somebody's losing money here. And what a lot of people don't understand too is the concept of impermanent loss, which is something that has arisen from these automated market making protocols. And just put simply, okay, what it means is that on Uniswap, the pools are 50-50 balance, the asset being traded and then the base token, right? The US dollar amounts of these assets are perfectly balanced. They're equivalent, okay? So here's what happens. Let's say rather than being a liquidity provider, and all these markets are going crazy, right? So rather than being a liquidity provider, I'm just a holder and I hold this token, right? I've got 100 of this token. It goes up 5x. I've still got 100 of this token, but it's worth 5 times as much. Now, I'm a liquidity provider, and here's where people are getting screwed, especially people that don't know what they're doing. I'm a liquidity provider, and the market goes up 5x. So what happens is those 100 tokens, that I had up here are now shifted towards the base pairing. So by just because, maybe I've got 20 tokens after that 5x. I've got more Ethereum, right? That's great.
Tons of Ethereum.
I've only got 20 tokens. So impermanent loss is the concept of, being significantly outperformed by just people that are holders of something in a market that's trending upwards. Being a market maker in any market, these guys at a centralized exchange, if an asset is uptrending rapidly, they're not going to continue to provide the same liquidity with the same characteristics on the way up. Like, they'll skew the liquidity.
Sure.
There's ways for them to manage that risk. But on an automated market making protocol, when there's a 50-50 distribution of liquidity and it's bidirectional, like the liquidity doesn't change on the way up. It's just always there. So you have to be careful about that. So some people that have kind of revolutionized that game, Balancer, have provided the ability to have skewed liquidity pools. So maybe it's 95% of whatever you're trading versus 5% of the base, which is a strategy that gives you exposure to the fees from market making, but also you suffer much less impermanent loss on the way up, or there's 80-20 pools or things like that. So there's definitely like a lot of innovation, that's coming into this space, and there's different exposure strategies for the people that do just want to be delta neutral, essentially, that want to gain fees or whatever. But at 95.5, you're not exactly delta neutral. You're maintaining pretty heavy exposure to whatever asset that you're holding. This stuff is all extremely confusing. That's one of the biggest roadblocks to it. And I think the easiest way to simplify this is to just break it down to its simplest components. You've got markets that are trending. You want to go look at the ERC20 contract. If it says token builder on it, get out. If it says, hey, this contract is, because it'll tell you, hey, this is an exact match for this other contract. Like,
that's a clone. Yeah.
Check out who's the team. Are these guys doxed or are they not? If they are, or if you Google image search their images, are they showing up as 100 different people on the internet? That's a red flag. Is the project novel? Then it might be worth taking a punt at. Now, you spoke about the rug pull earlier. And what a rug pull is these devs will list a project, and let's say that they'll list 1 million tokens and 10 Ethereum, right? So the project 10x's, and now they've got much less tokens, but they don't care about the impermanent loss. They know their token's dog shit. The only thing they care about is being shifted towards Ethereum. So when it gets up to here, what they'll do is they'll pull the liquidity from the exchange, and it doesn't matter that the project is 10x. The only thing that matters is that they've taken impermanent loss. They're been skewed towards Ethereum now, and now they're pulling this liquidity. They don't even have to sell. So it creates the situation where, oh my God, I thought I was rich. I thought I had a 10x, but now there's nothing for me to dump on.
Yeah.
And who in their right mind would provide liquidity? So now you've got a market that On paper, I'm 10x, but theoretically, I'm kind of at a stalemate here. I can't really do anything.
Now you're back to the 2017, 2018 situation. The token pumped. It's a massive wake-up, and it's a game of who can dump quicker, but there's not even anyone to buy.
So what happens when I provide liquidity on Uniswap? In return for providing that bidirectional liquidity, I get Uniswap V2 liquidity provider tokens. And those tokens are a voucher for that liquidity. And to redeem that liquidity, I need to redeem those tokens for the assets that I put in to provide liquidity. So the solution to rug pulling, and this is what a lot of people are doing, I know Unicrypt is one of the main places that is doing this right now, but there's also Open Zeppelin has made available time lock contracts and things like that, where developers will actually send tokens to their liquidity provider tokens to a time lock contract, and they'll say, you're not going to get rug pulled because I put a 6-month time lock on this liquidity, and I don't own these liquidity provider tokens anymore. So even if I wanted to redeem this liquidity, that I provided, and fuck you guys, I can't because I don't have access to the tokens I need to redeem the liquidity. And that's kind of been, when people join a project, they immediately will now demand dev lock liquidity, lock the liquidity, people won't shut up about it, but it's a good thing. It's people fighting for themselves and fighting to not be scammed, because there's so many scammers out there and so many clones and, people trying to take advantage of people.
If there wasn't that, there wouldn't be the opportunity for 5x, 10x, 100x gains.
I mean, literally,
you get paid for the risk you take.
When the dev locks, because here's the thing, I can come in and I can be a total degenerate and I can buy a project before the liquidity is locked. And there's a good chance that if the dev locks that liquidity after I buy that project, like I'm going to get X's on it because I bought in when that liquidity lock wasn't priced in yet. That security that locking the liquidity provides is something that will be priced in, because now people do feel confident in investing and knowing that they're not going to get rug pulled. But is that a great strategy? Hell no, because come on, you're gonna get rug pulled doing
eventually.
That.
Yeah.
The safest thing to do, and I verify this a lot before I buy something if it meets my criteria, which is I need something with significant liquidity. I want something that's a certain market cap, because a $1 million project can go to a $10 million project a lot easier than a $500 million project can go to a $5 billion project. There's totally different forces involved there. Okay. Retail can drive a 1 million project to a $10 million project, whereas it takes a lot more money to do that with a $500 million project. So the people that are looking to take advantage of these compounding gains and make some money in this, you need to look and see if that liquidity is locked as an initial filter. You don't need to be an extreme degenerate because even then, if you're just banging out 2X's left and right, through compounding, the gains could be absolutely absurd here.
You're going to do pretty damn well. All right, so the biggest
guys, seriously.
Biggest takeaways for me so far, for people that are looking at the Uniswap meta, at the Uniswap strategy this weekend, they're going to be digging in, is novelties, looking at projects that are new in some way, right? Finding the replicas, it could do well if it's the theme of the week, but overall those pumps are going to get watered down. Second thing is looking for liquidity lock, making sure you're not buying something with a contract that's just going to totally shit on you. What's the last thing, if you give people one more piece as they go for the weekend? And this can be a meta thing. This can be a small thing to manage risk. It can be something.
I'm actually going to give 2 pieces because I feel like we need 2 more to complete the picture.
Go for it.
So the first piece in there is that there's more ways, aside from a rug pull, that you can be scammed on these ERC20 contracts. Another one that's very common is a mint function. I know most people watching this probably aren't programmers, and that's okay. You don't have to be a programmer. But if you go to Etherscan and you go to that contract and you click on that contract address, and then you go click on the contract, the source is there. It's available for you. Control F, okay? Or I don't know what the Apple command is. I'm an I hater, but whatever the equivalent is on Apple.
It's like an Apple looking button plus F. Same
Apple,
kind of thing.
Apple F, Control F, guys, and type in mint, M-I-N-T, because you want to make sure that you're not buying something where there's a mint function on the smart contract. Because if that guy that deployed that smart contract has admin keys and he can access this mint function, what he can do, he can lock that liquidity, pump this shit 10x, and then quadruple the supply and dump on you just by calling this function and give himself all the coins. Now, some projects do need a mint function, but if there is one, there better be a very legitimate reason for there being one. I mean, if you've got a token where there's no reason for a mint function and it exists, that's a huge red flag. So make sure that mint function is not in there, guys. Make sure it's not a clone. Or make sure that the contract has a name. If the contract name is token voter, get the fuck out of there. Like these guys, that's not proof of development. If these guys can't even, deploy a basic smart contract to the Ethereum blockchain, they're not developers. Okay. And I'm not going to invest in any project that a developer is not involved with. Now, number 4, and I think this will give you a pretty well-rounded place to start.
Yeah.
When I look at a project, I want to look at it, and within the first 10 seconds, I want to be able to answer the question, how is this going to make me hilariously rich? And I know that sounds funny, but it's a valid question to ask, because if the project can't sell itself and can't put off that vibe to you and do it quickly, then it's not going to put off that vibe to anybody else. If you want to FOMO for any other kind of reason, that reason might be exclusive to you. Hey, we're an art project. Maybe you're a big artist, so that speaks to you. Oh, I'm going to invest in this. But think about this. How many other people are going to be touched by that thing that you're touched by? Everybody's touched by money. Everybody. I don't care who you are. So I look at a project, and a project's not going to normally say, we're going to make you rich as hell, right? But you have to get that vibe looking at it, that this is super hype. When noobs are going to look at this shit, when anybody's going to look at it, that narrative exists, and the project marketing team has positioned itself to put off the vibe that this is hot. This is going to make you money. No matter what they're hiding behind. If the team isn't about pumping the coin, then you shouldn't buy the coin. Period. So always ask yourself that question. Is this going to make me hilariously rich? I hang out in the trading pit, which is the hero chat room all day. There's Uniswap degens all day, talking shit, throwing out coins and memes or whatever. And people all day are saying, hey, take a look at this, take a look at this. And look, like a lot of like big follower guys will just say, fuck off. I'm not talking to you. My audience is like my bread and butter. Like these guys are doing so much work for me, and they're helping me to find all of this stuff that I can then, it takes a lot of fucking time, like don't get me wrong, but if I have the patience and I have the ability to actually dig through these things, I can't tell you how many fantastic plays I've made just because somebody says, hey, take a look at this. I'm like, the fuck is that? I go check it out. And I'm like, oh, I'm getting out my ledger. Like I've got to get in this right now. But it's like somebody said yesterday or the day before, hey, take a look at this. And it was like some token to where they were going to reward people with their token for watching gamers stream online. I looked at it and I said, well, how the fuck is that going to make me rich? Is it a cool idea? Yeah. But is that going to make me rich? Like,
no,
probably fucking not. And it's anybody can answer that question. Okay. It's not a hard question to ask.
All right. Well, I'm going to post the links down below. If anyone's watching this on YouTube, if you're listening on iTunes and Spotify, you do want to join the army of, I'll call them apes, because that's a self name. It's not it's not derogatory in any sense. An army of apes that are looking for these next Uniswap gems. The meta game changes every single week, and I honestly don't think there's anyone that gets it better than you do right now. I mean, I was watching Romano and you guys talk about this 4x, this 60x or something game you had in the past day or two. I was like, it's a different game than I play.
It's a different game.
It's fucking crazy, but I have a lot of respect for it. So if you do want to learn a little bit more about that, I think we at least covered some aspects of the risk management, how not to get yourself burned. If you just want to understand why people are so crazy about it, I think this episode did a good job of that. And if you want to participate or at least learn about the process, I would get down to the trading pit with Messiah. The links to join that are down below. It's been a pleasure, man. You have to take off for your wedding, so I don't want to keep you too long. What else do you spend time doing if you're not on Uniswap? You mentioned Hero. Just for the people that aren't as familiar with that, what do you do there?
So, technically my title at Hero is operations director. I think that's going to be changing shortly. My role at Hero is pretty much whatever they need me to do at the time. So right now my role for Hero is just growing our community, strategy, growth, things like that. I love working at Hero. It's a great company. There's great guys behind it for sure. If any of you guys have ever met Dan and Rob, the founders, they're really, really cool guys to hang out with. And they both have like 20 plus years experience, trading like huge money in traditional markets, like totally different game than we're doing right now.
Yeah.
The main thing that we're trying to replicate, and this is what I think the trading pit is so unique in, is that sure, there's all these different crypto groups that you can join, paid or unpaid, but we aim to be the unpaid group. We want people to come in, no matter how experienced you are, how noob you are, whatever, and come into a safe space where you can learn, where you can network, where you can make friends. My best friends in the world are guys that I've met like in internet chat rooms, as funny as that sounds. These are the guys that, would give my wife a call if I passed away and help her to, figure out what the fuck to do with all this shit. That's how much I trust them. But I met these guys in very similar places to the trading pit. And I think that's where the unique opportunity for you is going to be. If you can come in there, network, find your crew, which is the number one advice I give to anybody that's new in this. You want to find your homies here. Because when you have friends, it makes it all so much easier, because your friends will give you tips. You give your friends tips. You can cut up, make money together, lose money together, whatever. But it's an amazing networking opportunity for you to get in a room with 5,000 people. We're doing over 4,000 messages per day now. Find your crew. And even if you come just to do that and you find your crew and leave, if the trading pit is giving you that opportunity, then I'm extremely happy about it, because that's I'm more blessed to have my crypto, homies than, anything that I've gotten from crypto.
Making money together is, it's a lot better than making money and sitting at your computer all day by yourself. I'll tell you that. And
making money by yourself is lonely, man.
It's a pretty lonely game. I haven't seen Gunny since, I think the last time I saw Gunsberg, we were in Vegas playing blackjack together. I don't think anyone made too much money that night, but it was still a fun night.
Dude, nobody ever makes money in Vegas. Let's be honest.
That's just how it goes. And it's the experience. It's the experience that counts. That's how some people treat Uniswap. But if you are interested in making money, hopefully this episode helped you out. Massey, you got to get to a wedding. I don't want to hold you any longer. For people that have tuned in on this Friday, make sure to subscribe to the show. Got a lot of episodes come out, and I guess August is over. September and for the rest of the year, the market's going to continue to be hot. We're going to be covering it all right here. Thanks for coming on, brother.
Thanks for having me, Luke.
Yeah.
And for everybody that watched, seriously, thank you for watching. I know I'm long-winded, okay, but I genuinely do mean, if you come in the trading pit and you hit me up, like I'll treat you extremely well. I don't see myself as just higher than mighty or whatever. Like, if you need help and you want to come ask me a question, now don't come fucking ask me like, hey, I've got $1,000. What do I buy? Like, that's not what I'm going to do. But if you need some help with something that's not related to how to manage your money, then I will be there for you. I promise.
Respect. Crypto Messiah. I'm signing out. Cheers.